Crypto kids, we've got topping signs flashing everywhere. Now, thankfully, not for Bitcoin and cryptocurrencies, although in the very short term, we are running into some resistance that I will cover momentarily. These indexes flashing what is called a diamond top will create a troublesome Q4 for the cryptocurrency market. So there is definitely a relationship. The S&P is eerily following dot-com bubble era price action, and it could end in a catastrophe. Additionally, I will bring to your attention what it is that Saylor's strategy decided to do. Sunday, my cortisol levels went up because Saylor posted they're gonna need to add another color. What does that mean, Saylor? Are you gonna not buy Bitcoin and buy Ethereum instead? Are you gonna go and buy gold instead? Silver instead? Who knew? Now, we figured out that it was none of those, but the reply under the announcement message caught me a little off guard. I will end off with my predictions for FOMC, which starts in 25 hours. So if those sound interesting to you, make sure to destroy the like button and let me know in the comment section below which country and city you're tuning in from. If you'd like to participate in the best campaign we've ever run here on the CryptoKid channel, thanks to the support of Levex, with the first link in the description down below, when you sign up with just your email address and password, you can participate in the Deposit Weekly Get Bonuses weekly campaign we have running. And this is how it works in a nutshell. If you deposit 100 USDT as an active trader on the platform, you will be eligible for 20 USDT futures credits that you can use to open new trades, and the profits you make will be yours to keep. This is same for $500 USDT deposit, where your futures credit eligibility increases up until $2,500, where you can claim a 500 USDT futures credit. Right off the bat, you can get $15 trade for free without even having to deposit, VIP level 1 status, saving you 17% off trading fees, and you'll unlock my exclusive content over on the platform, where I do share technical analysis as such. At $66,500, we said that Bitcoin will can reject or face a consolidation. And in our videos, we followed up by saying, hey, the point of control at 62.7 is a likely level, or trying to get a bounce at 63.9 can also be the case. Bitcoin briefly bounced at 63.9 over the weekend. Today touched 62.7 exactly as predicted. And now, well, what is next? I will share my opinions. All right. Let's get started with the traditional financial TA. Diamond tops. Carl from the Moon made these famous in crypto YouTube. Before him, nobody else was talking about it. They occur at either the end of a bearish trend or the end of a bullish trend. They can also be continuation patterns. It depends on if you break its resistance or support line. But right now, the NDX that look at tech stocks, they look at AI, semiconductor companies. It's already broken down quite heavily. We shared this on July the 25th. Bar chart posted it on the 25th. We shared it on the CryptoKid and the Moonshow channel. We were still at the 684 territories when we spoke of it. Now we are down to, I think, so the QQQ is just the ETF, which tracks the NDX. So now we're down to $678. The S&P 500 remains in the pattern, but the QQQ is a foreshadow of what the S&P, in my opinion, should be doing. Additionally, Bitcoin topped out in October. The S&P has followed what Bitcoin did every single instance in prior history. Bitcoin tops out first in 2021, then the S&P dumps. Bitcoin tops out in 2018, then the S&P dumps. In 2018, you had a bit of a divergence, so Bitcoin went lower and the S&P went higher, but this divergence was what gave us a lower Q4 on both the index and Bitcoin. We know that Bitcoin is following 2018 fractals quite accurately, so now we've got the divergence again, and to me, with a topping pattern, it's a strong signal that we can receive a plunge going into Q4. The S&P follows fractals just like what Bitcoin does. We are in the price trend of 1996 to 2001 with a tremendous correlation above 90%, and it's super rare to find correlations this strong. August 7th, 2025, Julian Battel from Real Vision TV points out how S&P has done exactly what you've done between 1996 into 1999. Now, for a year, he didn't give an update on this phenomenal piece of TA. What I can show you is that the black line in 1999 leading into 2000, you see an initial increase followed by a small dump and then a secondary increase, which then tops you out and you go into the eventual crash of 2001, 2000. When we check out the S&P 500 and see what it did from August, well, where the analysis ends, you will notice when we remove Bitcoin, this is where it ended. S&P went up, small dump, secondary high. Well, we're at the point of failure. Quite interesting. Not so bullish on traditional finance. That's why I wasn't bullish on SpaceX. We noted on the day of the launch that we can get a short-term frenzy rally just for the amount of retail interest that was clearly into the stock. But then I wouldn't touch the stock at all until the end of 2027, when most of the circulating shares are released into the supply. We're doing as we expected. S&P is dumping. So I don't want to really be in traditional finance for some time. And the more evidence we have to back up that theory, the more strong the thesis becomes. I know Apple is at new all-time highs. I know that Google is up. I know that Amazon is up. But the dump from semiconductors and AI companies was enough on its own to bring the QQQ lower. South Korea is plunging by 7% in their own S&P 500s, even with oil coming down and decreasing to $79. Imagine Southeast Asia completely dependent on Middle Eastern oil. When oil comes down, their market goes up, vice versa. But with semiconductors and AIs crashing so violently, the Kospi couldn't hold up. It simply went down. So these are all warning signs. They are all warning signs. And if the S&P does follow its historical divergence with Bitcoin alongside its fractal between 1996 and the dot-com bubble, then a lower Q4 for both can be applicable. And what does that do to our beloved Bitcoin? Well, in the short term, we're still in this range. Over on Levex exactly a week ago, we pointed out that our pump to 66,600 can be short-lived and that a rejection consolidation is possible. We followed up later on targeting the point of control that was at 62.7. That point of control moved up to 63.9. So we said, hey, we could get a bounce here, but if not, then 62.7 is going to be our point of failure. And then worst case scenario, 59,100, 58,500. Bitcoin bounced exactly at 63.9. We had a small fake pump over the course of the weekend, funneled by geopolitical updates, which then rejected us to 62.7 exactly, which now we're getting a bounce from. So in the very short term, we're at the point of control, 63.9. I wouldn't be surprised of us facing a little bit of a setback here, but ultimately, I am long, and I'm willing to remain long on Bitcoin. On Levex, when you sign up with the first link, search for Crypto Kid, you will be eligible to follow me and see any live trades that I have. I'm going to be long on Bitcoin. I don't care if we fall to 58s, 59s. I'm giving Bitcoin until the second week of August to live its proper summer rally. And then from that point onwards, I will reassess. Okay? Getting a hit or getting close to the bull and bear market resistance will be a good thing. And I want to believe in Bitcoin and give it the benefit of the doubt. If on the second week of August, we are not close to the 200-day moving average, we're not close to the bull and bear market resistance bands, then yeah, I'll reevaluate and change up my positionings, which I will update you on the daily videos that we produce over here. Sailor, 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 what did you do? They decided to buy up more Stretch. So they diluted Common A, shareholder value as they always do, surprise, surprise, then bought up Stretch in an effort to bring it back to parity. Hasn't really worked that well. Of course, if Stretch goes to $100, then they can issue a bunch of capital to buy a Bitcoin from Stretch's demands, but Stretch will struggle to reach parity until Bitcoin goes into a bull market again, and this will take some time. So in my opinion, and it would have happened naturally. So in my opinion, they should have just bought Bitcoin cheap, let Stretch recover naturally when Bitcoin resumes its bull, and go on from there. So I don't really agree with what they've done. Apparently, they have close to $1 billion available to buy back and support their preferred equities, which is okay. But here's the concerning bit. So as a reply, they write the following, quote unquote, repurchases will be funded outside the USD reserve, including through MSTR and Bitcoin sales based on market conditions. Our objective is for Stretch to trade near $100. So they've prioritized Stretch going back to parity instead of prioritizing Bitcoin accumulation. So they are basically saying they're ready to do whatever they can to bring Stretch back to parity, which reminds me of their Bitcoin monetization program, that they're okay with selling Bitcoin to fund up to a $1.25 billion USD reserve that will be different to the additional Bitcoin they sell to buy back Stretch or pay for their expenditures. It's crazy. I'm not a buyer of strategy. I don't think what they're doing is smart here. Will they go bankrupt or will they get liquidated? No. But I think they could be playing this bear market more strategically. Finally, FOMC, exactly in 24 hours and 54 minutes time. Crude oil is going down. I like this shooting star candle, so we should ideally be heading lower on crude oil, but it's super subjective to developments in geopolitics. Hence, I'm not trading crude oil anymore. Nonetheless, you're up 22% from the lows of the previous month. Inflation should go up in July. And yeah, I think they're going to keep rates where they are. I'm curious to see if they give any forward guidance either on the FOMC statement or in Kevin Warsh's press conference on if they want to hike rates in September or not. So that will be the big surprise. And if we can get any hints, it will create Bitcoin volatility, which I will cover live over on the Moonshow channel. So thank you so much for watching. I hope you have a fantastic rest of your evening, and I'll see you all tomorrow. Bye-bye.